In the intricate terrain of contemporary finance, the middle class frequently encounters obstacles that impede their progress and entrap them in a cycle of stagnation, often referred to as the rat race. These subtle yet insidious traps originate from societal pressures, misconceptions regarding wealth, and a deficiency in financial education. The middle class, defined by some level of higher education, discretionary income, and retirement planning, is particularly susceptible to these traps. They face challenges such as pursuing academic paths with uncertain returns, succumbing to the pressure of extravagant living, and relying on debt to sustain their lifestyle. These obstacles hinder the middle class from attaining genuine financial freedom. So in this video, we are going to discuss 5 middle-class money traps that are keeping you in the rat race: financial education and management. Now, before we get into this video, make sure to hit that subscribe button and leave a comment below saying I subscribed. I will try my best to reply to as many comments as possible. Middle-class money traps that can hinder financial growth and keep individuals in the rat race, according to various sources. Number 5. Failing to invest properly. Putting all one's money into a single asset, such as property, which can lead to significant losses when markets fluctuate. Investing all of one's financial resources into a single asset, such as property, carries substantial risks and can result in significant financial losses, especially when markets experience fluctuations and downturns. By concentrating investments solely in the property market, individuals expose themselves to the vulnerabilities and uncertainties associated with a single asset class. Property values are susceptible to market conditions, economic factors, and localized events, making them prone to price fluctuations and potential declines. Diversification is a fundamental principle of prudent investing, and allocating funds across various asset classes, such as stocks, bonds, and real estate, helps to mitigate risks and enhance the overall stability of one's investment portfolio. Spreading investments across different asset classes reduces the impact of losses in one area, as gains in other asset classes can potentially offset those losses. To achieve a well-balanced and resilient investment portfolio, it is crucial to consider a diversified approach that includes a mix of asset classes, each with its unique risk and return characteristics. This strategy helps to minimize exposure to potential losses in any single asset class and enhances the overall stability and potential growth of one's investments over the long term. Number 4. Spending everything you earn. Living paycheck to paycheck without saving or investing, which can result in a lack of financial security. Living paycheck to paycheck without saving or investing is a precarious financial situation that can lead to a lack of financial security. It means that individuals spend their entire income on everyday expenses and have nothing left over to save or invest for the future. This can make them vulnerable to unexpected financial emergencies, such as job loss, medical bills, or car repairs. Without savings, they may have to rely on credit cards or loans to cover these expenses, which can lead to debt and further financial difficulties. There are several reasons why people might find themselves living paycheck to paycheck. Some may have low incomes that make it difficult to save. Others may have high expenses, such as rent, food, or transportation costs. And still, others may simply not be aware of the importance of saving, or may not have the financial literacy skills to create a budget and track their spending. Regardless of the reason, living paycheck to paycheck can have several negative consequences. In addition to the risk of financial emergencies, it can also make it difficult to achieve long-term financial goals, such as buying a home, saving for retirement, or paying for a child's education. It can also lead to stress, anxiety, and relationship problems. If you are living paycheck to paycheck, there are several steps you can take to improve your financial situation. Start by creating a budget and tracking your spending. Number 3. Not having a savings habit. Failing to develop a regular savings routine, which can lead to financial instability later in life. Not having a savings habit can lead to financial instability and difficulty in meeting unexpected expenses or achieving long-term financial goals. To develop a savings habit, consider the following strategies. Set SMART goals. Make your goals specific, measurable, attainable, relevant, and time-based. Pay yourself first. Automate your savings so you don't have to think about it. Use the 50 to 30-20 rule. Allocate 20% of your take-home pay to savings and debt repayment. Rely on annual events. Use milestones like the new year or benefits open enrollment to increase your savings contributions. Number 2. Relying on debt to look like a one-percenter. Relying on debt to appear wealthy or to mimic the financial structure of one-percenters is not a sustainable or realistic strategy. Debt ratios, such as the debt-to-equity ratio, are used to evaluate a company's financial health and its ability to meet its financial obligations. High debt levels can be risky, as they may lead to volatile earnings, increased chances of default, and higher interest expenses, using debt to maintain a lifestyle that is unsustainable, which can quickly deplete any wealth created. The concept of looking like a one-percenter is not directly related to debt ratios in the context of personal finance. However, excessive debt can lead to financial instability and a false sense of wealth. Instead, building wealth through sound financial practices, such as saving, investing, and diversifying income streams, is a more sustainable approach to achieving financial success. Number 1. Pursuing potentially unrewarding academic endeavors. Investing in education that may not directly lead to a substantial increase in income or job opportunities can still yield valuable benefits for individuals and society as a whole. While the primary goal of education is often associated with career advancement and higher earnings, the value of education extends beyond immediate financial gains. Here are some key reasons why investing in education, even if it doesn't immediately translate into higher income or job opportunities, can be highly significant. Personal growth and knowledge. Education, regardless of its immediate impact on income, contributes to personal growth, intellectual development, and the expansion of one's knowledge and skills. It enhances critical thinking, problem-solving abilities, and creativity, which are essential for navigating an ever-changing world. Increased social mobility. Education can act as a powerful tool for breaking down social barriers and promoting social mobility. By providing individuals with the necessary skills and qualifications, education can help them overcome socioeconomic disadvantages and improve their life circumstances, leading to greater equality and social cohesion. Civic engagement and democracy. An educated citizenry is vital for the functioning of a healthy democracy. Education equips individuals with the knowledge and skills necessary to participate actively in civic life, make informed decisions, and hold their leaders accountable, contributing to stronger, more inclusive societies. Health and well-being. Education has a positive impact on individuals' health and well-being. It can promote healthy behaviors, encourage preventative care, and increase awareness of health issues, leading to improved physical and mental health outcomes. Cultural enrichment and creativity. Education plays a crucial role in preserving and promoting cultural heritage, arts, and creativity. It exposes individuals to diverse perspectives, fostering understanding, tolerance, and appreciation for different cultures, contributing to a richer and more vibrant society. These traps can be difficult to avoid, but understanding them and developing strategies to overcome them can help individuals achieve financial stability and independence. Let us know your opinion in the comments section below. This was all for today. Hope you liked the video. Subscribe to our channel and stay tuned for more interesting videos. Stay safe, and we will be back soon with another video.